But let's also welcome Ashi Anand on board, founder and CEO at IME Capital. Ashi, we have limited numbers coming in from BEL as of now. I'm hoping you heard everything I said about those numbers. Any first takes on the stock and overall stocks from that sector?
Yeah, sure. No, if you just look at Bharat Electronics numbers, I think the revenue has clearly been slightly lower than expectations, but this is not something that necessarily concerns us too much because the order momentum is clearly quite strongly in favor. The longer term macro tailwinds about indigenization of the very large levels of defense imports, that is a very, very clear structural kind of a growth trend. So I think one quarter miss for a company and a sector where there are such strong tailwinds is really not too much of a concern. That said, the other element is that margins have clearly been better than expectations. Now we've not had a chance to go through the fine print, but you have seen margins and profits both kind of outperform. So I think net the numbers are reasonably fine. This is a space that we actually do like quite a lot. There are limited opportunities available where you have very clear kind of growth visibility over the kind of next 5 to 10 years. And I think in defense, given the sheer level of defense imports, until Ukraine actually overtook us recently, India was the largest importer of defense equipment in the world. There is a very clear government initiative to indigenize imports, which gives very strong growth runway for all defense kind of counters. This it is a segment where orders can be a bit lumpy, there can be certain delays, etc., which could lead to some amount of quarter-on-quarter variations. But I think the longer-term runway for growth in this space looks very interesting.
All right, so that's the take coming in on the defense counters. And yes, there has been an operational outperformance versus the estimate when it comes to BEL numbers, and hence the spike on that particular front, wherein EBITDA has seen a jump of more than 30% on a YY basis, while margins have also improved, and 28% is the new number, and a bit of a recovery on the stock price as well. So that's about BEL. But moving on to Coal India and the coal linkages that the government is planning, and a new policy could be at play. But Ashi, just wanted to have your take on the coal sector overall, and specifically the listed entity, Coal India, because of late nobody is really discussing about the PSUs, and such PSUs like Coal India, where in one point in time there was always a debate that because of the higher yield, the stocks might get rewarded, but of late they have lost the momentum. No significant news flow, and today as well we had the announcement from Ministry where the Coal India to reach 1 billion ton per year output target by 2026 and 27 was the announcement, but no excitement indeed. Anything on Coal India that you wish to highlight, that why is it that the stock is not performing?
Sure. So if you look at Coal India, I think the problem is more kind of the company and the sector as compared to interest in PSUs. In spaces where there is kind of momentum in terms of overall business momentum, if you look at railways, if you look at defense, if you look at PSU banks, where there is a kind of earnings recovery and momentum, I think there is clearly interest in kind of the whole PSU space. Now, why is it that kind of Coal India is missing? What happens is, as investors, when you are sitting and trying to value a company, or even if you're looking at its dividend yield, what is really important is the longer term sustenance of those particular earnings and that dividend yield. Now, when it comes to kind of Coal India, you are kind of, if you're looking at it from a longer term perspective, there is a very clear transitioning which is happening away from thermal coal towards solar and other forms of renewable. I think this is a very clear kind of a path at a macro level, at a government level, individual companies, etc. So if incrementally new thermal power plants are coming up, right, the use of incremental coal from a longer term perspective, you may have visibility over the next 3, 5, 7 years. But if as a fund manager, you can't sit and understand what earnings are going to be 10, 15 years down the line, and you're questioning the very longevity of the business, I think that is the core concern. So when it comes to the very high dividend yield that Coal India provides, what investors are concerned about is, given the fact that there is limited growth, the main thing you have from a return perspective is the yield that you earn. And that on its own, if you look questioning longer term sustenance of earnings, what you do have is year on year inflation is there, costs go up, but you need kind of revenues and prices, etc., to also move up. And in a sector where there is a longer term longevity risk, I think that is the core reason why you are seeing a lack of focus or momentum in this space.
is going to be on IndusInd Bank, and that doesn't sound like like it could be a very optimistic set of numbers because the stock is already under pressure, down 2.7% as we speak. Ashi, any take on what we can expect from IndusInd Bank given the kind of numbers we've seen from Kotak? You have some banks that have done well, for example ICICI, but other than that, no big outperformers from the entire private banking space. Your views on IndusInd?
So banks firstly have been a bit disappointing, right? You have a combination of a growth slowdown, you have NIM pressure, and you have asset quality also kind of worsening. None of these on their own are kind of particularly concerning. The growth slowdown is muted, the extent of margin pressure is not very substantial, and even asset quality is worsening but not at worrying levels. It's more the combination of the three of them that's kind of coming together, causing a certain level of pressure. So that's kind of outlook on banking, and we really do like banking quite a lot, even while there is some amount of short-term pain. I think the combination of growth and quality at the kind of valuations that are currently available make them very attractively positioned from a longer-term perspective. So that's kind of banking. Coming to IndusInd specifically, I think the street is going to be probably a little more focused in terms of the outlook of the turnaround of the bank. What is the new management likely to be? What is kind of plans to kind of turn around the bank from the historical issues? Most people know that the current quarter is going to be a kind of a wipeout, so I don't think numbers here or there are going to have as much of a material impact as a kind of outlook on how long is it likely to take for the bank to kind of emerge from the current issues that they are facing. Clarity around the new management strategic direction, how they are likely to kind of reposition the bank's kind of overall strategy. I think these are going to be the things that people really focus on, and that will be key drivers of the stock, as compared to what they kind of report in the current quarter, which I think most people do expect to be quite weak.
So that's the outlook when it comes to the banking space then, but just a few minutes left before we should show